Hello guys, welcome to another YouTube video, and we apologize for going MIA, but we are back with another YouTube video, and I can assure you that you definitely love this video because it's loaded with lots of knowledge that will help you improve your trading skill. So today I'm going to be talking about how you can identify order flow. And when we talk about order flow, what are we talking about? We are talking about trend. The retail traders will call it trend. So I'm going to be saying retail traders in quotes because in essence and in all honesty, we are all retail traders. But when I say retail traders, you know what I'm talking about. So the retail traders prefer to identify the market movement by saying the market is trending up or the market is trending down. But in smart money concepts, we like to say that the market is in a bullish order flow or is in a bearish order flow. So the reason why we say this is because the retail concept of uptrend and downtrend is that in an uptrend you want to see series of higher highs and higher lows, while in a downtrend you want to see series of lower lows and lower highs. But you agree with me that the market is not always this perfect. There are some times that in an uptrend, instead of seeing series of higher highs and higher lows, you will see lower highs and lower lows in between. So it gets confusing sometimes. So but now if we are identifying the market movement as another flow, there are ways by which you can identify it such that even if the higher highs and higher lows create a lower low or a lower high in between, we are still able to identify that the market is still moving in an uptrend. So that is what I'm going to be talking about today. So now, in a bullish order flow, or if you want to use the retail term, in an uptrend, but I would like to use the word order flow because as far as I'm concerned, it is the right word to use based on the concept I'm about to explain now. So in a bullish order flow, we want to see the break of highs and the manipulation of lows. So and there's a difference between break of structure and manipulation, and I will explain that. So have it at the back of your mind that in a bullish order flow, we want to see break of highs as a break of structure and the manipulation of low. Normally, we want to see the lows untouched, but we know that the market is not always perfect. There are some times that even in an uptrend, the market will come and touch the lows. But even if it touches the low, we want to see the lows being touched as a manipulation rather than a break of structure. So this is what I mean. So for example, we saw that the market created a low here and the market created a high. And after the high, we saw the market create another low. And we saw that this low went ahead to break the previous high as a break of structure. And after breaking it, it created another high and another low, and we saw that this low also went ahead to break the previous high as what, as a break of structure. And after that, we saw the market create a new high, and this market creating the new low manipulated the previous low. Normally we are not supposed to see the market come all the way down here, but now the market is coming all the way down here to touch this low. But we want to see the market touch this low as what? As a manipulation and not a break of structure. So before I proceed, I want to make us understand that in this video I'm going to be talking about the daily time frame. So everything I'm going to be explaining applies to the daily time frame because this is how I identify my market order flow. So if I say manipulation, I'm talking about manipulation on the daily time frame. If I'm talking about break of structure, I'm talking about break of structure on the daily time frame. But I will still explain it in more detail. So I just want us to have an idea with this schematic so that by the time I start explaining it on the chart, it is not so complex to us. So now we can see that the market came all the way down here to manipulate this low, you know, and I will explain why I refer or why I regard this as a manipulation and not a break of structure. And we can see that this low now was created a new manipulation. For a lot of people, once they see this manipulation, they believe that the trend is about to change. But for me, it's not about to change because this was just a manipulation. The market is still in a bullish order flow. So on the other hand, in a bearish order flow, we want to see the market break lows as a break of structure and not touch the highs. But even if it will touch the highs, we want to see it touch the high as a manipulation. So as we can see here, the market created a high and a low. After the low, it created a high. And after the high, we saw that this high was broke the structure to the downside. That is, it broke the previous low, and after breaking the previous low, it created a low and another high, and the new high now what breaks the previous low as a break of structure. And we can see here that this new high what manipulated the previous high as a manipulation. Yeah, manipulated the previous high as a manipulation. Okay, so that is how to identify a bullish and a bearish order flow. I know it might be complex for some of us that are not aware or that do not understand this concept prior to watching this video, but I will try my best as much as possible to break it down. So now, I know you are already wondering, what is the difference between a manipulation and a break of structure? How do I identify a manipulation from a break of structure? How do I distinguish them? I know you have lots of questions concerning that. So now I want us to pay attention because this is where it gets interesting. So now we have this daily candle and we have this new daily candle. This is a previous daily candle and this is a new daily candle. We can see that this daily candle created a wick at the top here, and we can see that the new daily candle's wick traded above the previous day's wick. But look at what happened. The body fails to close above the wick. Rather, the body closed below the wick. I don't know if that makes sense to us. The body closed below the wick. So for me, this is a manipulation and not a break of structure. In a break of structure, I want to see the body close above the wick of the previous day. I want to see the body close above the wick of the previous day. So if the body closes above the wick of the previous day, like I have in this example, I regard it as a break of structure. But if we have something like this is not a break of structure to me. This is just a manipulation because the wick just manipulated the previous day's candle. For me to regard it as a break of structure, I want to see the market, the new daily candle's body close above the wick. So that is how I identify my break of structure, and this is how I identify my manipulation. So when we get on the chart, it will be more clearer to you. So I'll go straight into the chart now, and I want us to start with this up move. You know, looking at this up move, we could already see that this was a bullish trend in hindsight, but let's use it as our example. So now, let me stay in drawing mode. So now what do we have? We had this low that was left untouched. Remember what we are looking for, because we can see that this market is in a bullish order flow. What we can see, or what we want to look out for, is we want to see the market break highs and leave lows untouched. So the first thing you should look out for when applying this concept is you want to see how the market is reacting to the lows, because that's the most important thing to us. So we want to see the market leave the lows untouched, or worst case scenario, we want to see the market manipulate the lows and not break the lows as a break of structure. So for example, we have this first low untouched. So we also have this low untouched. We have this low untouched. We have this low untouched. Please forgive my lines, they might not be straight, so but it does not matter. We have this low untouched. We also have this low untouched. Now we have this low touched. But how did we have it touched? We have it touched as what? As a manipulation. Let me zoom in so that we can see it very well. So we can see that all these previous lows were untouched, but look at what we have here. We have this low touched, but we had it touched as a manipulation because this candle failed, the candle's body failed to close below the wick of the previous daily candle. So let me annotate that. So this is a what? This is a manipulation. So since this is a manipulation, remember in a bullish order flow, we want to see the manipulation of lows and break of structure of highs. Break of structure of highs and manipulation of lows. And as we can see that here we had this as a break of structure because the body closed above the wick of the previous daily candle. Here also we had what? A break of structure because this body closed above the previous daily high. We had this one also closed above the previous daily wick. We had this, though here the market failed, the next daily candle failed to close above, but we are still in a bullish order flow because what? The lows are still being untouched. So that's what I'm trying to explain. So we can see here that the low was untouched, but it was touched as a manipulation. So we are still in a bullish order flow. The trend has not changed. So let me continue. So we can see that this low also was left untouched. This low, the next daily candle did not touch it. So we can see also that this low was touched, but it was touched as what? As a manipulation. So let me mark that also. It was touched as a manipulation. Exactly. So now we can see that we are still in a bullish order flow. So this will give me confidence to keep looking for my buy trades, because if the market is in a bullish order flow, you want to do more of buys than sells. So now we can see that this low also was left untouched. We can see that this low left untouched. You can see that this low was touched, but it was touched as a manipulation because this candles body fails to close below the previous day's wick. So that is why I'm able to identify it as what? As a manipulation. Let me clone this and also mark this. All right. So we can also see that this low was left untouched. This low also left untouched. This low also left untouched. This low also left untouched. And now let's look at where drawing mode. Let's look at where the trend reverse and see what I'm talking about now. So we can see that this low was touched, but look at how it was touched. It was touched as a break of structure. This is a break of structure because the new daily candle body closed below the wick of the previous daily candle. So this is a break of structure. So now we know now that our bullish order flow has ended. And now that the bullish order flow has ended, we want to see the highs untouched now. Remember when we were bullish, we were looking at the lows being untouched, and even if they are touched, they should be touched as a manipulation. But now that the trend, the order flow has changed to a bearish order flow, in a bearish order flow, we want to see the highs untouched. And worst case scenario, we want to see the highs touched as a manipulation and not a break of structure. So now let's see. We had this high untouched. Let me stay in drawing mode. We had this eye untouched, this eye untouched, this eye untouched by the next daily candle. Yeah, this eye was touched, but it was touched as what? As a manipulation. This eye untouched, this eye untouched, this eye untouched, this eye touched, but touched as a manipulation. This eye untouched, this eye untouched. This eye was eventually touched, but look at how it was touched. It was touched as a break of structure. Why? Because we have what? We have this new daily candle body closing above the wick of the previous daily candle body. So you can see that it's not difficult to identify the order flow. So in a bullish order flow, the lows are untouched, but even if they are touched as a manipulation and not a break of structure. So once we see breaks of structure, we can now know that there is a possible trend change, or there is a possible change in order flow. So now this is a break of structure. This is a break of structure, signaling to us now that the bearish order flow has ended and we are now in a bullish order flow. Now look at the bullish order flow now. You can see the low untouched, low untouched, low untouched, low untouched, low. Low was eventually broken as what? As a break of structure, not a manipulation. So now we can see now that here that we have this break of structure, this is a potential change in order flow. So this is a break of structure. This is a break of structure, and we can see what happened after that. Let me remove this and leave drawing mode. So you can see that what happened after that. We can see that it was at that point that what the market started. Sorry about that. I'm still in drawing mode, I guess. We can see that it was after that the trend changed and started coming down. So this is how to identify order flow. This is how to identify order flow. This is how to identify order flow. So when you are able to identify order flow, it will help you to form your buyers daily, that okay, if you are in a bullish order flow, I should be looking for more of buys rather than sells. If I'm going to be selling, if I see a sell opportunity, it's just going to be a short-term trade. My long-term trade is going to be a bullish trade because we are in a bullish order flow. And you know, sometimes if we go on the 1 hour time frame, for example, now, it might be difficult to actually identify these order flows because a lot of we have too much information, and the market is just creating several structures. So a lot of us get lost in all this, and you know, it might be so confusing. So the easy way to do it, or the easy way that I've found to do it, is to use the daily time frame to mark out this order flow. So always remember that in a bullish order flow, we want to see break of highs and manipulation of lows. And how do we differentiate between a manipulation and a break of structure? In a break of structure, we want to see the candles body, the daily candles body, close above the wick of the previous day. That is what I regard as a break of structure. So I hope you guys enjoyed this video. If you have any question you want to ask, or if you have anything you want me to clarify, please drop a comment and I will make sure to reply. And please don't forget to like this video, subscribe, and share this video with your friends so that it will help them sharpen their trading skills. And that will be all for now. Bye, and see you guys in the next video.